Again, 4th of August 2026. Today is on Tuesday. So yesterday I talked about these relative equal highs here, and I talked about how I wanted to see price run into those relative equal highs here in pre-London, but you can obviously see we failed. Started running lower into the new week opening gap. I talked about all these here in the New York session, and I took two trades. One was a loss. I was hoping for price to run into these relative equal highs here, but it didn't. And then when I started to see it run into the current new week opening gap, and then I took a short, and then I recovered the loss that we took here. So all that business is on yesterday's video. If you're interested, you can go watch and learn what you look for when you come in front of this price action and all of those whatnots of price action. So you can obviously see we ran into the current new week opening gap here, and then going into the New York session, that is the regular trading hours open for the index futures. The time is right here. That is that is embedded inside this 4 o'clock candlestick. Open up, ran lower below the sell side here, and then we had this huge run higher into the relative equal highs here. I explained all this here. I talked about if we do not run to the relative equal highs here in early London, then we'll run to the current new week opening gap, and then in the New York Open we'll open up and then run these relative equal highs here, and that's exactly what we did. So we're looking at pre-London today. I'm still expecting higher prices because you can see we're running higher. We've ran higher, and then I'm expecting price to go above this high here. This high here is 28,930. So that is 20,930.56. These highs here, this high is 970.90. So 930, 970, they're so close. So I'm expecting price to start moving higher into these highs here, especially this one. This candlestick is at 12. This is at 1. This is at 2. So this is the buy side that I'm looking for price to start moving into. So that's 90, and that is supposed to be white. Yeah, okay, that's nice. So let's look at price in these lower time frames. So if we look at this 5-minute here, we opened up at 0 GMT, obviously start to consolidate here. Had this run lower, we did not run into yesterday's low because we've managed to get yesterday we managed to run higher and close high on the day. You can see the daily chart here. Opened up, ran through the new week opening gap here, and then we have this run out of this week, and now we're trading here. So the bias is still bullish. 5-minute chart, we ran lower here in Asia. Asia opens at 2, so open right here. Open up Asia, consolidation, run this high out, and then we have this decline here. After this here, we have this huge movement higher. So my interest is this inefficiency here, this buy side balances inefficiency right here. So I'm going to rotate that as nicely gray, and then I'm going to move this out to say 9 right there, and then I'm going to rotate the midpoint of that inefficiency. So I'm expecting price to start running into that inefficiency, especially into this. There's a CB here. I'm going to rotate that CB again. So I'm expecting price to start running into that CB. So this here is like this, and then 0.33, and then I'm going to move it at the midpoint of that BC. So sorry. So after running this high here, I think this move higher here also runs yesterday's high. Let's look at the 15 minutes and let's see what that price point is. This here. So we move higher, take out yesterday's high here, and then move lower, then have this run here on buy side, and now we are consolidating inside this move here. So we ran yesterday's high. This buy side liquidity pool here is the one that I was talking about yesterday, the relative equal highs on the 1 hour chart. That is it. And then you can see here we ran that here after we opened up at, that's 4:30 is 9:30 am the New York time. So we ran into this current new week opening gap. You can see the midpoint here. I talked about these two levels. We ran lower, opened up, ran below this low here, and then we had this run higher against buying side, and now we are trading here. So let's move to our 5 minutes. We can move here. We've gone below this low here. We've gone higher. This inefficiency here, very important, together with this CB here, especially now this CB is huge, bigger than this one here. You can see we ran lower, ran after that inefficiency, and then you can see we found support. Now the fact that we are moving above the midpoint of this inefficiency here tells me that we are bullish. So my interest is to see how price wants to run above this high here, and I've talked about that high around that level, that is that 970 level. So this high here, the current daily high, that high is 930. So this is what I'm expecting price to run into. So there's white, this is 930.56. So I'm going to annotate this inefficiency here just because it's so big. So I'm going to annotate the quadrant of that inefficiency. I've not showcased quadrants, but ICT showcases them when he's normally looking at daily inefficiencies because they are so huge. He's normally looking at the quadrant. So that is buy side liquidity. So that's buy side. And we start moving lower. We start moving out of this inefficiency here, then I'll be looking at this low at sell side. So we've opened up today. The midnight New York opening time, the one that I normally draw out, is right here. And so strange is the middle point of that inefficiency, almost close to the middle point of that inefficiency. Right at this candlestick. Right there. So we opened up here. We opened up today, had this kind of like rejection, and then we have this move higher, and then we have now a very small consolidation here. So I've talked about how I want to annotate the quadrant. Let's look at what this price point is. Actually, let's copy it, and then I'll be annotating this here from this here. This price point was around 20,880 something. So that 880, I'm gonna paste that price point that I've just copied. And there we go. So we have this midpoint here. So I'm gonna take this here and put it here. That is an 894.94. 4.94. And then I'm gonna take another one here and put it on this level here. That's the lower one. That is 867.19. So I'm going to take this fib off. Now we're going to be tape reading and looking at what price does. there, right there. So the way we're going to read this inefficiency here and determining whether we are going to be bullish, I don't want to see price start trading on the lower portion of this inefficiency here generally, and I want to give it an allowance so it can come and trade here on this lower price, this lower quadrant. It can touch it, but I don't want to see anybody's being left on the lower portion of this inefficiency. So I want to see it start to generate higher and use this upper portion of price action to just um, stay in it and start trading higher. So you can see this CB here. I have not really any interest of annotating it because it is represented with the upper quadrant of this BC. So I'm going to be using that. So if we start trading lower here with the bodies, then I'll be assuming that it wants to trade lower, and maybe we will run this low out. So that is what I'm simply looking at this in this morning. So initially I've talked about my bias. We are bullish. So I'm kind of expecting price to stay on the upper portion of this inefficiency here and start trade higher. So currently we are trading at 28,885. So 880 level is around the midpoint of that level. So if we start to gyrate to 900, I'll be expecting a buy at 900. Then we're gonna expecting price to start moving into 920. So I think I've stated all my bias. I've stated what I'm looking for. I've stated what I'm looking at. Remember, those are two different things. What I'm looking for and what I'm looking at are two different things. So let's look at how price wants to behave with this midpoint of these buys and balances and efficiency at the basic, and how it wants to run into that bicep. That's what I'm looking for. So let's look at this daily chart here. So after I talked about all this price action here from this inefficiency here, we ran lower. And then this was last week Thursday, had this movement higher, and then Friday we had a run higher, and then we came and closed up on the low. So this week we opened up with this new week opening up here, very interesting. And now we've opened up and we've ran higher. Actually, let me annotate this yesterday's high because it's so close. It's right here. That high is that price point. That is a buy side liquidity pool that was taken. So 2.09 right there. So that is yesterday's high, a very strong liquidity pool. So today in Asia we moved high above that high here. Even after running above it, we ran above it once again. So this accumulation of buy stops here can just be enough for price to start moving lower and seek sell side before it starts moving higher into that buy side again. So we're going to wait for the first macro that is going to come in the next 6 minutes, and we'll see whether they'll push it higher or they'll push it lower. Remember yesterday the first macro came into the marketplace and it completely switched the whole narrative of bullish prices. Yeah, if you watch that video you can see it. I was trying to buy it, but it went completely against my bias and then started moving to the new week opening up. So you must be anticipating that kind of price action. You must anticipate what these macros do. A macro is a run, can be a run on liquidity in the direction of momentum, or a macro can be a run into the opposing liquidity of momentum. That is, anybody who's been chasing it higher and on anybody who chases price lower just because the momentum has been going lower, the macros will come into the marketplace and they'll run against that liquidity. Same thing that can happen right here. We've been bullish since yesterday. We've been running higher from yesterday where we opened up at right here at the index futures opening price. And I want to look at whether we have what the kind of opening range gap that we had. So this was the open and this was the close on Friday. So it's not really much of a huge opening range gap, but the elephant in the room is the new week opening gap. That's why right here yesterday in early London, we had a switch in momentum and then price started to trade lower. We traded into this inefficiency and I talked about how I want to price go below this inefficiency and I was selling it and I recovered the loss that I had here. So that was a very nice lesson. And then today we are right here. So we are bullish. I'm expecting to still price to run into that buy side. And I've said how we are gonna read this inefficiency to determine that, and how the fact that we've gone above yesterday is high because there's a very huge pool of liquidity here. Price can have an interest not to go into that buy side fast. It can start running lower and then later on start running into that buy side just because we've ran yesterday's high and we've ran against anyone who's been short in the daily chart. They try to run against that. So momentum is bullish still. I'm looking for higher prices just to go with the momentum because that is that's what price does majority of the time. So look at the bodies here. The bodies have stayed on the upper portion of this inefficiency here, and that's exactly what I want to see. And then if we move into 900s, I want to expect the price to start running into this buy side. So we have 3 minutes until this first macro comes in, and then we'll see whether they'll want to push it into this buy side or they will want to take it low and fast and then we'll go higher. But just a point to note, we're bullish. You can see this run here. We had this rejection here with the lower, with this lower low that takes out this low here, and then we had this move higher. Buy side imbalances and efficiency right there, and you can see we have yesterday's high there. We ran to that BC, and then start running higher. Had a run low, and then we had this push higher once more. So I want to see another push into the 900, 20,900, and then we'll see whether we run into 920s and 940s. So 20,889s now. So the reason why I started focusing on this time of trading is price is not really, there's not really much volatility like it is in the New York Open. So it's really easy to make money here with momentum than it is to make with while trading the New York Open because there's so much volatility that I've blown accounts doing that. So I just had to find a sweet spot where price is really gentle and where it moves like constantly, where it moves with a constant um, momentum. That's the whole point. So that's the first candle with the macro. So we've traded into 894s. So it's headed to the upper portion of that inefficiency. And I've talked about the SIB here. It's embedded inside that BC. So we're going to be looking at how price wants to trade around that level, because this is a portion of a balanced price range. So while looking at that, let's look at a 15-minute chart. You can see this 15-minute, we moved higher and closed right there with the bodies. So I'm expecting that to be 50, 55, and then yeah, it closed there on that one new 1 hour candle, and that 5 o'clock starts there and then start to trade lower. So that's important. So the fact that we went above that buy side here with the bodies on the 15-minute, it can have an interest to run higher, because if you look at this candlestick here and you grade it the way I've graded this inefficiency here, we've traded to the upper portion of that there's another block. You can see the midpoint, we've ran into that with the bodies. So I'm expecting price to start running higher and even take out this buy side. So you can see how this macro is sticking up with those bullish prices. So that's nice. So we moved into 900. So I talked about buying that 900 level. We went into that. So I'm patiently waiting. So I'm waiting to see where this candlestick here closes. And you can see it's not really aggressively running above that 900 level, even though it is sticking up with the higher prices. So I'm actually going to buy that 900. I love the way it is sticking up with those higher prices, and I want to see it run through it. So if it moves down once more to 900, I'm gonna buy it. So we're at 905. So you can see the push higher. This is a very nice push. This candlestick opens up at 893.09. We have this very small wick here, and then we start moving higher. So it's coming back down. So I'm gonna buy that 900. So there is a new 5-minute candlestick. So I like the way it's sticking up on the upper portion of that inefficiency as a whole. And there's a very, very small volume imbalance. This candlestick here closes at 901.06 and this opens up at 901.59. So from 06 to 59, that's very small volume imbalance there. So it has not really come back down to 900. I'm expecting it to come down to 900 and then I'm going to buy it. So it's up 905. So this 5 minute candlestick here is the last 5 minutes in this 1 hour. In this also in this 15 minute. So we want to be careful. Maybe it traces lower in the next 5 minute candle, the 1 hour that opens up. We'll be buying that 900 and then we'll be expecting prices. Let's look at this 1 minute here. So it's so close to 900. So there we go. We're in on that buy. So let's see whether we'll get a movement higher. So we bought 898.64. That's around 900, but 2 points less. So I want to see it stick up on the upper portion of that very small inefficiency and then start to move higher, especially in the next 5 minute candlestick. So we're 10 points down. So I really like the fact that we've not even ran lower to touch the midpoint of that inefficiency. That's very nice. So in the next 15-minute candlestick, I expect it to expand and start trading higher. Let's look at a 1 hour chart here. So this 1 hour chart, remember, it's coming to an end. So I'm expecting those higher prices. So there we go. We've met this retracement lower. So from this, where we bought it, That's around the 900 level. This candlestick's low is 885. So those are 15 points down. So we've opened up. Look at the way it's running through that candlestick again. So again, those are 15 points down. So I don't really expect it to trade to the halfway level of that inefficiency. I want to just see it keep up with the higher prices. It's not really advisable to buy it at the top of the range. I've done. Best case scenario, I would have waited it to come into 800. This opening price was at 879. So maybe buy it at 880s. That could have been the best case scenario. So basically we are almost 20 points down. So this candlestick here, the low is 882. Basically we could have bought it at 880s. There we go, we've touched that level. I think it wants to flash through that open. So from where we bought it at 900, we're 20 points down. Wow. Those are the 20 points that I normally look for every day. There we go. We print that very small low out. If I could have bought it at 880 because that has moved to 876, so that's a 880 buy. That's very interesting. Very nice 880 buy. It could have been at 10 points now. But now that we bought at 900, we're going to be waiting and see how it trades. And you can see the rejection. So we are back down again. I'm going to wait for this 5 minutes here to close. And then we're going to see whether we have a push higher in the next 5 minutes. If we start moving lower, then I'll be accepting that I'm wrong. And then maybe we look for another trade entry if we can find one. So from 880s, that's a nice buy there. And expecting higher prices. So don't close candlesticks. So let's see whether we'll have those higher prices. So we closed on the upper portion of that mid gap. That's nice. There's a very small inefficiency there. So I think that's what price keeps referring to. So we're 20 points down and it does not really want to move higher. So I think we're gonna be closing up that for a loss, and then maybe we'll look for another buy. Let's look at that 1 minute. This one candlestick is a struggle. And this run higher here, we've got a buy side, but still the momentum is bullish on the higher time frame. So expecting higher prices. So once I'm in on a trade, I'm normally looking at how price is behaving with swing lows, with swing highs. Does it want to really move higher, or does it move aggressively against my position? So where we are trading at right now, I'm still expecting higher prices. So again, I've talked about how to be consistent with your buyers. We've been going higher. We've had this push higher here, even though we're trading from that high and this low here, and we're trading inside this consolidation here. But you can see the bias is bullish. We're having swing lows. We're having higher swing lows, and we're having swing lows and higher swing highs. So the momentum is bullish. Even though we've had this retracement here, 20 points against my position, I'm still expecting price to start moving higher and make an higher and higher high. So anyone who bought it at 880s, that's 10 points in. And if it goes to 900, that's 20 points. For me, that could be it, but now that my position is at around 900, so let's wait and see what we have. So that's the end of the macro. So we started the macro right here. That's 750. Trend higher above this small high here, and then just started moving lower. So we finished here, and look at the next candlestick here, opens up run slower. So I really don't think this is right for me. So I think I'll try to look at how price, if we close below this midpoint of that inefficiency, then that will be a no for me and I'll exit that trade. So if we close below this kind of, this midpoint is 881.88, that will be it for me, and then we'll maybe wait to see how price trades going into the London Open, or we'll look for another trade entry in London. So we are back down to 872. Look at that, touched 870. Those are 30 points away from my entry. So normally London has very consistent price moves. So I'm not going to keep this up here. I'm just going to exit on that trade. Let's see how the 1 minute has run lower. So you can see that it's still keeping up with the lower prices. So I think that's really it for this position. So I'm going to exit on that. 30 points lower on that run on momentum on which we have had the first macro again run lower. Now with the fact that we have this movement above this high here and movement above yesterday's high, and I talked about this here, that's the reason why we've had this move lower. So the narrative is we are still looking at price inside this inefficiency here, and we've gone way past these two levels here, and I want to be interested in seeing how price is around this price point here. Anybody who had entered this run higher with momentum at 880, still the loss here will have been, the low here is 862, 18 points down. So the momentum is still bullish. You can see we've not really made a lower high, a lower low. This is the intermediate low that runs into this BC, and then price moves higher into this BC that I grayed out. We move higher to the upper portion. We spend quite some time here, and then we start moving lower. So this move lower, I'm thinking is a run on stops. And I still think we're gonna move higher. So the next 15-minute candlestick, look at that push higher. So I'm gonna buy that 80 level. That's around 79. Now that we've had this push lower, I'm expecting for it to push right back higher. So we've ran into this lower portion, but we've not closed on this lower portion. We've ran lower. We've closed outside the midpoint of this inefficiency there. Now I'm looking at this like this was just a run on this low here on stops, and just the macro is not really like it has changed any momentum here. And now I'm expecting higher prices. So we bought 870. That's around 880. That's 880 level. I'm expecting it to run into 900 and probably run into the high of this inefficiency. So what I normally think is the momentum is going to remain the same. It's just that the entries are the ones that are tricky. The entries are the ones that are tricky. The entries are the ones that are always tricky. You can always think that price is going to run higher, or it's going to remain on top of that inefficiency, and then it's going to run higher, but eventually it starts maybe running against you and maybe runs 20-30 points lower, and that's not really what I expect of my entries. If price runs 20-30 points against my entry, I'm just gonna look for another entry. So that's around 880 level. So again, you can see the decline there, back to 870s. Another thing with momentum is you want to be sticking to one kind of bias, unless you're really completely wrong. You want to be sticking to one bias. If you start, let's say I bought it and then I change my bias, I start selling it. If you sell it, it's gonna go higher, and you're gonna be asking yourself, what the hell did I just do? I mean, the bias was bullish. You should be sticking with bullish prices. If you've determined that your bias is bullish, stick with bullishness. You do not go around changing bias. Now that we've had a run lower, I'm not going to be selling it. If you sell it, then it will go higher. And then you want to be buying it, then it goes lower, and then you're like, oh my God. Then you're like, you do not know what you're doing. So if you're bullish, you're going to be sticking with bullishness all the way through. So we're back up at 880s again. So I'm expecting price to start running into the upper portion of this basic here, because I highlighted this basic because this is the narrative. Now that we've ran higher, we've had this decline, try to buy it on that 900 level, had this major decline lower here, and I got out at negative 30 points. And now that we've had this run lower here, I'm thinking that these are run stops. I'm expecting higher prices. So you can see this candlestick here, the way we moved higher. Look at the 15-minute moved higher. and I'm still expecting higher prices. So it's trading right now at 894s. So 892. So remember that buy that I bought at 900, and then we had this decline lower. Now now we have a very nice move higher. So another thing that I've learned these 2 days is I gotta wait out for the macro that comes out, the first one that comes out after we've had the New York Open. You gotta just wait for that macro, this 750 to 810 macro. You gotta wait for it because it's normally a very crazy displacement on whatever price action that you actually expect. If you're expecting higher prices, it's gonna run lower first and then it goes higher. I mean, it happened yesterday. If you look at yesterday's price action here, right here, we were trading higher after we've opened up the new week opening gap. The 750 to 810 macro comes in, and this is the 750 candle, and it starts moving lower. And apparently, I was trying to buy this here to run into that buy side. Moves lower, completely changes the narrative, and we move into this inefficiency here. So it's way crazy. So today, same thing has happened. The 750 comes in, we run higher above this high here, and then I try to buy it because I'm expecting that macro to be an extension of whatever price has been doing, and it's really not. So it moves completely against my position. So we move lower, and I've talked about like expect this to be a movement on stops. Maybe try to trick some people that we are going lower now, like it did yesterday, but the momentum is still the same. So I'm expecting higher prices, maybe run above this high here, and maybe the complete fill of this here. So I was trying to buy that 900 level, and I was trying to expect it to price to expand into 920s, and then we move lower, way past I way past what I was expecting. I was not really expecting price to close on the halfway level of this inefficiency. So now that we had this movement higher, so I'm still expecting higher prices, not changing my bias. I talked about that. You do not go around changing your bias. If you're bullish until price does something that completely changes your bias. Like yesterday, I've talked about bullishness, but once we went below this inefficiency here, this midway here inefficiency, then I was expecting price to start running to into the new week opening gap because that's also a very huge drawn liquidity, and we moved below it, start moving higher. I looked at the bodies here. We moved way past where this inefficiency is, and then I was selling it around here, and then we got our 20 points, and then that was it. So today's price action, we've moved lower, and now I'm expecting still higher prices. So if we're trading at 20,893. We still have 1 minute until this candlestick here closes, and then we're gonna see what the next one does. So I like the idea that we wicked into the lower portion of this inefficiency, and then we got out of it. Look at that low price traded out of it, and now we're trading on the upper portion of that inefficiency. So there we go. We are not 900 now. Um, on a normal day, I will have exited that at 900 because that's 880s. 900. That's very nice. But now that I bought that 900 level, let's see whether we'll get an expansion through that high. So I'm going to take that out at 900. That's 903. So I'm going to be gauging how we trade around that level, and then I'm going to get out above that level. So actually, I think that's really it. Um, those are 20 points. It's not really like I've returned whatever that I lost here, but that's a very nice movement higher, because what we're normally aiming at is 20 points. So from 878, that's around 880 level, we've moved into 898, that's around that 900 level. So that's really it. So this has been the loss this morning, -61. That's what I was waiting for, price to run into that 90 level, but you can see we ran into this low here, and then I exited at 30 points. So that difference here is small of a difference, and if you keep doing this here, like today, and then you're going to tomorrow, you do the same thing, the wins are gonna overpass the losses. The wins are gonna overpass the losses. So that 61 minus 39, that's like that's $20. Yeah, at last you're gonna be surpassing that drawdown. So we managed to get a trade with the momentum bullishness. The first one I was wrong. I've not been wrong on the momentum, because we've had this trade, we've had a buy here that has been profitable, and I've said if you keep up with this here, you're gonna be more profitable than a person who comes and trades in the New York session. So we've had this move lower here, and then we've had the push right there, on which I'm expecting price to start running into that buy side. So the reason why actually I got out of that trade at around there is I was expecting this kind of a high resistance liquidity run like what we've had there. If you look at this 15-minute chart, we have so many wicks. So this generally a high resistance liquidity run, even though we are bullish, is gonna be having many retracements and whatnot. That's why I was long at 900, and then we had this push lower. So you can see we've pushed lower down to this candlestick's low is 889, and then it's right back up at 903, and I want to see it run above this high here and eventually run to that buy side. So one thing that I'm happy about in this session is I've been right on momentum. I've not been wrong on momentum, and momentum is the way in this when you try to trade this midnight New York open time. Look at that, we're up to 910. So if I could have been a buyer at 900 and still waited out for this retracement here, you can see it comes right back up. And where does it go? We are trading at 910 now. So I'm expecting it to go into this buy side. So the only thing I need to work on this kind of trading method here is the entries. The entries, you must work on the entries. The entries means you must have the experience to determine that price can do these things, but it will stick on momentum. So we're gonna state this inefficiency here, just like I talked about when we were trading around here. I was expecting price to run through into the full closure of this inefficiency. I liked the way we did not trade on the lower portion of this inefficiency down here. And now we're trading at 914, 915. So best case scenario, I want to see it going to 920, and this would be a very, it's a very disturbing on my entries, but the momentum is still right. I'm still right on the momentum. So if we go above this buy side here, that will be it for today, and then we'll close this up and come back tomorrow and look for the same things. So look at where we closed here. This is not really a coincidence. We closed right there on that inefficiency, and now we're moving higher. We're trading at 918s. Normally, right there, 920. See that? That could have been very beautiful on that entry. So I want to see it run to that buy side first. So that buy side is 930s. That high is 930.56, and I want to see it run through that 930 level. So what still encourages me to do these things here every day, to look at these things here, and if you do this long enough, apparently you'll become profitable. It's inevitable. If I could have held onto that buy there, I could have still gotten more points from 880 level to 920. From 880 to 920, that's 40 points. That's $80. So it could have been 20 points above the loss here. And then if you hold it longer into 830 above that buy side, 930 above that buy side, then those are 50 points, those are $100, and then you get the $40 that you've been looking for, right? So basically what I'm gonna be working on is my entries. So I'm gonna be talking about entries this week. Every day I come into the market every morning. I mean, in my time is morning, but in New York it's midnight. I'm going to be talking about entries in these electronic trading hours. So one thing is clear, the momentum is clear and it's right, but the entries. So this high here is 20,922.75. I could just close this up here, but I want to see it trade into that buy side just to make a point, right? So today has been interesting. So it's another day to accept that momentum trading works, ICT concepts works, and it's just a matter of working on your entries. So you can see we moved lower here. I was looking at this inefficiency here. I did not really want to see price close on the half portion of this inefficiency. The reason why I drew out this quadrant here is to gauge whether price has an interest to run into this low here. The momentum is bullish. I drew out this inefficiency here because we were trading here and we were having higher swing lows and higher swing highs, meaning the momentum is bullish. So I was getting, does price have an interest to start trading into the lower portion of this inefficiency? That's why I was buying it up here, and I was expecting price to start running higher. But you can see we had this movement lower, and we moved to the lower portion of this inefficiency. I was like, I don't really want to see that. I wanted to see it remain on the upper portion, but you can see we wicked into the lower portion of these inefficiency, and then you can see how we had this movement higher. So immediately I saw this movement higher here. I bought it again at around 880, and I was expecting higher prices to run above that high. And you can see we've ran higher, and now I want to see it run into that buy side. So the gap concepts are these precise. These precise. The fact that we did not run on the lower portion of that inefficiency, even with the bodies, that makes it higher probability that we're going to run higher. And you can see here we have this movement run higher. we had this run higher, opened up, tried to run lower, and then we had this run higher, and look at where it closes on the upper portion of that inefficiency. And then now we ran higher, and now look at that buy side. It's beautiful, right? Run higher, and we are up to 936. So now that we've ran that buy side, that's gonna change to silver. That's gonna change to that, and that's it. So this has been a very nice experience. I'm gonna screenshot this. I'm gonna keep this to my journal. So I'm gonna also do this. Screenshot this right there. Capture this, and then at the same time, I'm gonna be capturing the whole of this. So that's beautiful. You've seen the narrative around these inefficiencies, the narrative around inefficiencies and liquidity pools. I've explained it through this 1 hour. I've been looking at price action. I've talked about the momentum. I talked about my bias. I talked about how to stick to your bias. You do not want to be bullish and then you're bearish and then you're bullish and then you're bearish. You want to be sticking to one form of bias until price delivers or it does not deliver, and that's it. You're done for the day. So this has been a very nice movement higher, and you can see it over delivered. If you are looking at 930, you can see we've gone to 940s, and soon it's gonna be in 950s. So if you're looking for a buy from even that 900 level and you waited long enough, not that I was waiting for this retracement and it went way past what I was looking for. I waited for it. I did not really like it when it went below the half point of this inefficiency and we closed on the lower portion of it. I did not like it. That's why I exited that trade. But then now that I saw we started moving higher, I bought it again and the 20 points were delivered there. So if we could have waited a little bit longer, it could have over delivered, and that's one way to learn something. That's one way to learn something. So this has been beautiful. I don't want to be making this video a lot longer than it is. You can see the delivery here, and that's it for today. So until we do this again tomorrow, remember the buy side here on the 1 hour chart. This is the last thing I'm going to talk about, and then we're going to close this up. I talked about this high here when we started with this video. So you can see the high here. That's what I want to see price run into, and that is 970 level. The exact high is 970.90. So if you're gonna be watching that, just make sure, does it trade into that or does it not? So until tomorrow, adios.